Good morning from Chicago traders. It's 8:01 a.m. Chicago time on the 18th of October, 2021. It is Monday morning here in Chicago. This is episode number 2096. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Jumping on over to the Convergence Trading pre-market summary sheet, we see that mild risk-off sentiment today as the market sells off a little bit, supposedly driven by the China GDP miss this morning or yesterday. I think it was expected in the 7% zone, came in at 5%, something like that, for last quarter. And then there's interest rate pressure. We see the treasury yield upticking in New Zealand, in the UK, and in Europe slightly. Also here in the US, we're seeing the 10-year and the 30-year selling off a little bit in the future. So that's where we stand this morning in terms of key earnings. We had Albertsons, Sandvik, and State Street. We're expecting Steel Dynamics after the close. Again, we are dead in the middle of earnings season here. At least the majors earnings season goes on for a while, but the majors are definitely in play right now. So very important to track what's been going on. State Street beat by 4%. Albertsons beat by 42% on earnings, 4.4% on revenue. So higher profit margin there. And Sandvik beat by 25%. Steel Dynamics expected to come out at $4.57 after the close. So that's where that stands. Looking at today's calendar, we're expecting industrial production in about 12 minutes. NAHB Housing Market Index at 10 o'clock. Monthly budget statement for September. I get the feeling that we had this on Friday, but monthly budget statement for September at 2 o'clock. Foreign bond investment at 4, and the tick flows at 4 as well. Again, the Reserve Bank of Australia is meeting. Meeting minutes come out. We're going to see what the central bank there is thinking. So again, the two themes: slowing growth, slow recovery, and inflation. Those are the two key themes here in play. Looking at the markets, the S&P is opening in a 22 point drop. The S&P is actually below Friday's range at this point into the gap. The Dow 176 down. The NASDAQ 65 points down. The Russell 14.5 points down. And the Euro stocks and the DAX down around 102 basis points, 88 basis points. Crude oil is higher. Crude oil is trading December now. If you have not rolled, you should be trading the December contract. The S&P this morning, 209,000 contracts traded, which is relatively normal. The overnight inventory is 94% short, which is relatively not normal. And the range is relatively wide. We just pushed through and put in new lows in the overnight session. 33.25 points of range have already been had. The S&P shows 69.5 as the high, 47 as the point of control. And we are down near lows. Currently at 41 with 36.25 being the low. So that's how things stand this morning. Looking at what was expected on Monday, the primary scenarios: we open, we rebalance the inventory probably against the overnight point of control. The overnight point of control was 43.5, 44, 43.5. Was looking overall for a gap to remain open, for this gap to remain open. I was looking for it to hold the overnight point of control, push through the overnight high to give us the overnight stat, and then to acquire the 65, to target the 65. As I said on Friday, range is expected to be a modest 20 points or so. Not expecting much more. Again, highlighted right here, 65. Looking for that to be the key test area. Here's what we got on Friday. On Friday, we opened up in a gap. We gapped up to 44.52. The prior session high was 44.31. And we had an open auction out of range on Friday. So it was all about, Friday's trade was all about, okay, are you going to fill the gap zone? In other words, are you going to drop and be responsive into the 31, which was scenario 2? Or are you going to test down, consolidate, and push higher, which was scenario 1? Scenario 1 has it. We pushed down to 44, 45 even. Remember, I was expecting it to push as far down as the overnight point of control at 43.5. And then looking for a push into 65.50, 65. We got to 67.50. This was scenario 1. Pretty much in line with the plan, giving us an upward skew in what was a market that was initiative, moving away from the gap, moving away from the prior settlement. Normal variation day on Friday, nothing special. And then we come in this morning or yesterday evening, we pushed that high. We pushed that high on Friday. We closed in the upper quartile of the range on Friday, expecting that 67 to be taken, a 67.5 to be taken. We took it out as soon as we opened on Sunday night, and then became responsive. We consolidated for most of the session. We poked through the low a couple times, so we poked into a gap. There's a gap down here. If I pull up the master levels, you can see the gray area there, the gray shaded area. That's a gap zone between 31 and 45. And we pushed into the gap here this morning. The gap mid is 38. And it looks relatively risk off. It looks like sellers are pretty much in control here. Before we come to that conclusion, however, it's important for us to look at the overall picture. What have we accomplished here? So if I take out, this is an RTH only daily chart. If we look at what we've done, again, we've impulsed down in a gap, pulled back, continuation trade, set up a higher low, or to those of you who look at inverted head and shoulders, we have a right shoulder here, and we're looking for it to break the pivot, which what the time was about 44.08, something like that. And then it has run through. It took out the 55 prior high on Friday, went to 67.5, and now it's pulling back and it's trading in this gap. So if you trade patterns, which I don't, that's what you would see. More importantly, I like to look at the auction and see what the auction is actually saying. So if we look at the profiles themselves, these are weekly profiles. We have migrated the point of control lower, which means that we're accepting prices lower. Volume is trading more at lower prices. And then we took this big jump lower, and then last week we started to stabilize back into 43.50, which comes to us from here. We also saw quite a bit of volume at 43.50 in the past. This whole area is quite thick. And then last week, 43.50 was a sticking price, tough area to trade, and we ran away from it on Thursday and Friday. Quite bullish break higher, but weak structures left behind. We have two gaps left behind. We don't like to see gaps in an auction. Well, it's not like we don't like to see them, but what they indicate is an incomplete auction. We don't know what the interest is in that gap. We skipped through it in the RTH session. So we have these, we consider these weakish structures that are likely to fill in down into 31, which is what may happen today. So we've moved away from, so we've shifted the point of control down, follow those pink lines. Those pink lines are the points of control for on the weekly, and we've moved away. This is what's called initiative behavior. This is really setting up to run from a base of 43.50. So we have covered 100 points in 2 days, basically, and we may have stretched a little far. So currently we're trading at 44.40 even right here, and holding steady in the gap. Remember, Friday's low was 44.45. So we're opening in a gap. So it's anyone's guess as to which way it would go. Looking at the monthly, so if I bring back these boxes, the black versus the gray is the month flipping. Okay, so each box represents a week, and them going from gray to black to gray to black highlights a month. So this is a month right here. This is a month right here. This is September right here. It's very easy to see what the month did. September expanded down, quite bearish. And then so far in October, we put in a low for the month, but we're also squeezing through the midpoint of the month and are pushing higher, with last week establishing one-time framing up on the weekly. So we have one-time framing up on the daily, weekly, and then we don't have it in a month. So this auction is starting to lose its bias, whereas before we used to have one-time framing up on the monthly, one-time framing up on the weekly, and on some days we would have one-time framing down, which is counter the month and the week. But on days where we start to turn up, we have some pretty strong days, as you see here. We start to reverse that down pattern. And so, again, this is like a top-down look at the market, month, week, day, compare the trend, and the way we define the trend in the auction is what's called one-time framing. The market is one-time framing up if the lows stay intact. The market is no longer one-time framing up if the low gets taken out and you get a range extension through it. And then one-time framing down is when you have lower highs. So we don't care if it made a lower low. You know, people talk about price action and they say, you know, lower highs, lower lows, trend down. We don't care about a lower low. It can be an equal low. As long as the high stays intact and is protected, we consider that bearish. And then for bullish, as long as the low stays protected and intact, then we consider that a bullish trend. So you could see that the weekly has put in a higher low. Don't really care about the higher high, but there it is. And then the daily has put in a low here, which is the pivot day, and then we have a higher low, which triggers the one-time framing up on the daily. And then on Friday, we put in a higher low again. And now we're breaching that. We may be breaching that. And so what we may end up with is this big kind of balance zone between 44.50 and 43.50. Don't be surprised if we end up just chopping around in here as we try to sort out this thing with the treasuries, the inflation issue, as we look at earnings, as we look at China. There's just a lot for the market to digest here. It doesn't seem like the recovery, given the amount of fuel in terms of dollars that has been injected into this market. The market's not recovering as well as participants expect, and so you may see people keep their hands in their pockets while that's being sorted out. So today is one of those days that may start that off. So that's the big picture that builds our context. Looking at the overview. This is the overview chart on Edge Pro X. You could see that the ES has moved directionally away from its VWAP. The blue lines are VWAP, monthly VWAPs. Same with the Dow, same with the NASDAQ. Of course, crude has been tapping the VWAP and continuing higher. Crude energy prices potentially contributing to inflation continue to be strong. Gold made a good run last week and has come right back into its VWAP here. Silver remains relatively strong, and then the bonds have been struggling to pick a direction. The bonds made a quick run across the other on the other side, and they are stuck now against their VWAP, against their monthly VWAP, whereas the 10 years clearly running away. And if the price of the 10-year note drops, yield goes the other way. Interest rates go up in that for that duration, for the 10-year. Okay, so this is part of what's likely driving, going to drive the indices down as yields go up on the curve. The big stocks are impacted. The big players, the blue chips, the mega stocks all get impacted negatively. So you need to keep an eye on what the notes are doing. Okay, the euro remains above its VWAP. The cable's been relatively strong. The Swiss franc was strong, is kind of steady, and the Japanese yen just weakening every day. That's the big picture. That's kind of like the global macro picture. Let's take a look at what's expected for today. And by the way, I just want to break in here. This is a live feed from this website. That for an event that was created by Convergent Trading's team for my birthday. I would love to see you contribute. If you go to ct.pro/CT-charity, I would love for you to contribute to this fundraiser. It is intended to benefit St. Jude's Children's Research Hospital. This is an incredible organization. If you have not, contribute $1. It could be tax deductible. You're not giving the money to me. You're not giving it to Convergent. You're giving it to this feeder that then sends the money to St. Jude Children's Hospital, all of it. And so I would certainly love for you to support this charity. Again, the link below is go to ct.pro/CT-charity. We set a target of 2,500. We're at 1,756. We're getting awful close. The link is also pinned on your YouTube chat at the top. If you click down, you'll see the link right there. Go to ct.pro/FT71 fundraise. Why is this? Well, it's the same. It's the same. It'll take you to the same place. I just want to take a moment and have you check that out. Let's get started on what's expected for today. So the way things are shaping up, you may notice these gray bands on the chart. These are stock zones. These are areas where I'm expecting the S&P to turn, or where I'm expecting a reaction to take place in the S&P. And so those are engagement areas. We always look for how a stock zone is tested, and then we lean on order flow or whatever you want to use to engage a trade. So these levels are anticipated reaction levels. They are put there ahead of the session to create a map of what's expected for the session. We are currently trading at 44. We've popped up to 44, 43 and a quarter, and we are holding steady here. We are below what was a relatively balanced day on Friday. and we're approaching from below. To me, the primary scenario is a responsive buying spree back into the overnight point of control of 47, which is it's very likely to take out right now. It looks like it's going to go for it back into the prior day's range for a push into this 56, 57 area right here, 55. I'm going to say 55 through 57. Okay, consolidate, pull back, and then we may see us filling the gap in down into 31. 31 with a potential poke and closing the naked point of control at 44.30 or so. So that's what's expected for today before we get the bounce. Down here, 30. Remember, there's an MC point of control at 28.75, 29. So that's where we stand on the primary scenario. I'm expecting the primary scenario to be relatively bearish. The secondary scenario is very simply a market that opens up, immediately pushes lower, but the overnight inventory is it's quite negative, immediately pushes lower, takes out the overnight low, gets an impulse higher. So we don't really care about scenario two until we get this impulse higher. This is what's going to tell us that we can now engage on the long side, looking for a long to take out the 55, 57, and to bring us back to settlement from Friday. The settlement from Friday is 44.62 half. That becomes a target from around 31.32. So that's scenario 2, looking for 62 to 65 as the target to the upside. What this would likely do is it would put in a lower low, but it would squeeze the high and then help traders come in on Tuesday and resume buying into the 44.88 and then the 4,500. And then now we're starting to tackle new all-time highs, which are 44.30 something. So those are the two main ideas for the day. The map is quite simple. You see it in front of you here. We have a level at 50, the point of control at 45 actually. Point of control is at 47. We have 55, 57. We have the 62, 65, and then off to the races we go with a 44.80. 44.80 is quite large. 44.80 is a big area. There was a double top up there a while ago and has remained intact. This is the big target right now is 80 for the ES on the upside. Okay, good luck, and I hope you will contribute to this charity event, and I hope to hear from you soon. Let's see the numbers continue to pop higher. Let's see us. Hopefully, you'll help us. You'll help us achieve the $2,500 target. Remember, this money is contributed towards children's cancer, and children's disease. It'll make a difference in someone's life. Please contribute. Thanks.